Hello and welcome to the Bee Formless Flow Driven VC podcast. I am talking to the mysterious Jonathan Sun, and for the first time ever when it comes to the pod, I'm actually not going to introduce Jonathan and what Jonathan's been up to. I'm switching it up and I'm going to try something different because why not? It's Monday. So, Jonathan, you are based in London, but you go between London and San Fran, Silicon Valley way. Tell us about what you're up to. I will throw it out there that you are an ecosystem builder, and we've had some interesting chats. But tell us what you're up to. Tell us what you've been doing, how you got into VC. Leave it, I'll hand it over to you.
Yeah, I mean, I am John, and basically for the last few years, I've been an innovative finance investor, and ecosystem builder. The innovative finance side is basically through Upside Down VC. We've been trying to find a creative way to basically invest at the friends and family stage in Europe, and basically get returns off of being somebody's, effectively functioning as somebody's rich parents. And yeah, on the ecosystem end of things, I do build communities of investors and previously founders just to bring everybody together to share deal flow in fairly authentic ways.
Yeah, cool. I love it. How have you been in VC? Have you been in VC your whole career? Have you always been in finance, investing, innovation, all of that? Or were you doing something previous that then drove you into this field?
Yeah, I mean, I've been an ex-founder and head of community, so I think that's kind of like a little bit more of my background and stuff. Before coming into VC, which was around nearly 4 years ago, right?
Yeah.
And basically, I got into VC, I think mainly not really to get into VC, but because I wanted to, I think, solve problems for founders, right? And then kind of like sort of like introduce something unique within the investor ecosystem, and subsequently introduce kind of like a new type of product to just to create something that wouldn't exist in the sort of like extremes of like the all or nothing world of venture, because in the world of venture, it's sort of like you either build an extremely fast growing business and something that tops out at over $1 billion or nothing, right?
Yeah.
And the truth is actually a lot of people are building companies that either have a ceiling of somewhere a little bit more in between that, more in the $100 million range or etc. And it's good, I think, to create some way where founders can get money, fueling those types of businesses, um, without, having to resort to funding that doesn't suit them. So yeah, no, so we've started investing out of a creative, flexible debt and equity instrument, and yeah, we've just been slowly building out that track record over the last few years in Europe, and we also have there's also a fund doing something very, very similar that we've taken a lot of inspiration from living out in Santa Monica. So their name is Chisos Capital, so CHISOS. And so they've done over 100 investments to date, which is nuts. I mean, really happy for them using the exact same model. And yeah, it's just I think it's a movement that's slowly growing, what we
Yeah.
call alternative investment, creative investing, right? But I think, it's especially, more important now than ever, that founders are able to take more options than ever before, in terms of, you know, what kind of capital is, going to be best suited for their company, and, how can they best access, just different resources needed to grow a little bit faster than, themselves maxing out their credit cards.
Yeah, I love it. There's a few things coming up for me. It's almost like I call it you're like a shapeshifter of the VC. And is that kind of where the name Upside Down came about? Like that you're shaking the VC up in terms of what you were just talking about. And, also second point is that you were a founder previously. So through your lived experiences, you've probably seen the gaps within VC and gone, from a founder perspective, how can I then make a difference in the VC with my lived experience as a founder? Like, is that where it kind of came from in terms of, I guess it's twofold there, right? The reason to jump into VC, but also then this brand name. My background's brand, so I'm always fascinated by the name of the company. But listening to you've called out there's this gap currently in the VC where it's like one extreme to the other, and yet there's a lot of businesses that are here to make a difference. And how do you support them? How do you invest them? How do you help them grow? How do you help them grow in a sustainable way where it's not, so that they have a chance. They have a chance to, kind of thrive as a business and succeed.
Yeah, I think yeah, the name pretty much means that we're just trying to put turn VC on its head.
Hey, I like it.
Um, and that's how you get the name upside down from. So I think it's a pretty cool name,
Yeah,
and
same.
we were lucky to secure the domain for that. Um, and then the second bit actually, I think the concept actually came more from when I was a head of community for just various different startups, and I think it came about during that period of time because I think like when you're building your own startup, you actually spend a lot more time heads down than like, really sort of like I guess if you want to call it like building friendships and collaborating with other founder friends, I think that's kind of like what tends to happen a little bit more in the operating world. As a head of community, you spend a lot of time, organizing stuff and getting drinks with founders at 10:30 p.m. at night, right? So you hear a lot more of those stories. And then I think just kind of like the ideas of like what I was building came a lot more from those 10:30 p.m. conversations about like the frustrations of a lot of founders on their fundraising journey. Um, and yeah, just listening to I think how they want to see the fundraising ecosystem be improved. And this is sort of like I think I still want to use the term attempt just because I think like you don't know the true long term sort of like is it working, is it not working
Yeah.
until the final returns come through, like, how many investments have I been able to make over a 5, 6, 7, 8, 9, 10 year horizon? Um, so that's kind of like a little bit more TBD, but I think it's definitely created some momentum so far over the last few years.
Yeah, cool. And what are you hearing? What are you seeing as some of the founders' frustrations, like in terms of what you were just talking about when you were getting the calls or the messages at 10:30 at night? Like, what is it? Is it that they're not feeling like they're supported? Is it that they're, like what is the some of the frustrations that they were sensing that you were like, yeah, that's like we can potentially solve that.
Um, I think for a while, especially in Europe, there's been a lot of conservatism around early stage investing and sort of like a bit of a sort of like I want to have my cake and eat it too syndrome, where they want all the benefits of early stage investing without any of the risk. And that's exactly like saying I want all the benefits of exercise without lifting a dumbbell. So I think that translates to certain, if you want to call it conservative attitudes being like sort of like, etched out across, the European tech ecosystem, which is not as not extremely ideal, right? And then I think some other frustrations, probably I think not as aligned capital in a lot of ways, right? I think just a lot of founders, taking pure equity checks when it's like not as well suited towards their business, right? I think like pure equity capital is great for founders that are trying to grow extremely fast and hit that unicorn status without realizing that the unicorn is not a normal startup.
Yeah, right. And so is that then like is that kind of lack of knowledge or like is this like from a founder perspective? Like what is like when they're doing things like that, is that because like dare I say it, is it greed? Is it not like is it lack of knowledge? Like what is going on in the founder's mindset when you see those things?
Probably two things. One is that you want to talk about like dominant narratives, right? I think like the big VC funds are the ones that have the most amount of money to deploy, and they have lots of tight connections with media. So anytime they receive a big fundraise or invest in a cool company, it gets plastered on the news. Founders like seeing their names on the news as well. So, you know.
Ego.
Traditional VC funding is kind of like seen as sort of like what's the term? It's it's basically seen as the status quo.
Yeah.
It's seen as what you're supposed to be doing. It's seen as okay, like I can get my name out there and I can, and I can be seen to be doing something proud when all it is just you've just received a little bit of resources needed to actually pursue your real mission, right? Um, so a lot of it is narrative. The other bit of it too is well, what's the other bit of it? One bit of it is the trying to remember train of thought. Um, Yeah, so one bit of it is news, and the other bit of it is sort of like founders believe that VC is free money. I
Right.
mean, even though you're giving up equity, which is extremely valuable, but it's not free money. But equity isn't tangible today. It's a lot more tangible 2, 3 years from now. But it's still an incredibly valuable piece because it's ownership. But unfortunately, when you're in the early stages, you're thinking, oh, 20% of this, 5% of that, 10% of that. It's too easy to trick your brain into thinking that this 10, 15, 20% doesn't add up long term down the line, especially the losing of control. And the losing control means the uh the compounding of pressure, if that makes sense.
No, that makes sense. Like you talked around this equity doesn't mean anything until like first two, like for 2 to 3 years. So call me my simplest in terms of what you're saying is that when you give up 5, 10, 15, 20%, are you saying that quite often you'll see founders think, oh, okay, I've got this opportunity now, I can do what I need to do in the business without thinking about the long-term impact of what they're giving up from an equity perspective, and when it's like they think it's free cash, so they think, oh, I'll use that cash now to build the business out, but then in 2 to 3 years' time, like it depends on where the business is at, that they might owe money. Like I'm just trying to understand when you say they think it's free cash, is that what you mean, or am I just like not understanding it?
Well, I think of founders, first off, equity is never free cash.
No, that's what I
It's
mean.
just
It's never.
more of like a psychological shortcut that is a bit too easy to fall yourself into the trap of, right? It's like, all right, I'm gonna give away 20% for what, $600,000. And that 20%, yeah, I mean, in the beginning it sounds like, well, I still got 80% without realizing that if you tack on subsequent fundraising rounds and bring on more investors and more dilution happens, and then you start thinking a lot less about your own percentage because you think you're just racking up, money on top of money on top of money. Oh, I don't have to pay this back, right? Without realizing everything is a cost of capital. Everything has to be repaid one way or another, right? I mean, all right, a VC fund is chucking $600,000 at you. They want to say like what you're doing. They want to say in sort of like how you do things, and a lot of times, I mean, it may not be your vision for like how you want to grow things, right? I think it's
Yeah.
important founders are able to balance, sort of like taking outside money um, with sort of like, being able to still control their day-to-day state of affairs because, you know, in the end of the day, like people don't really think about the sort of like cost of like taking someone else's money and then subsequently having them breathe down your neck because it's not your money. And it's not even the VC's money either because they have a fiduciary duty to their limited partners as well. Um, So it's actually the limited partners' money that it just gets funneled through the VC and then given to you. So it's incredibly important to understand the dynamics of like how an ecosystem works and sort of like position yourself accordingly is like, all right, do I want to be a part of that value chain? And what value chain do I want to be a part of? And what's the most important to me long term?
Yeah, it's really interesting that you've called that out. I haven't had this discussion yet because it is important, right? And quite often we're looking for this reactivity, this fast like response. Oh, great, got cash now. Don't think about the fact that nothing's ever for free in terms of money especially when it comes to money. And there's always kind of implications or rules around it and expectations and, investors wanting to see their returns and, you do lose a sense of control. So, it's kind of almost like for me, it's the ego. It's when we're kind of going, oh, if I've got all this cash now, I can do all this stuff with my business. But you just never know what's going to happen, right? In terms of what you're creating, if you like, um, are you looking at that like as an ecosystem builder? Are you looking at that differently as well, and how you ensure that the founders understand what they're getting themselves into to change that sort of a mindset? Like, is that something that you're focusing on also?
Um, sometimes through like educational
Yeah,
types of get-togethers. So I think, that's kind of like a slow but hopefully influential one day set of, sort of like, um events. I mean, I think I used to run Zebras Unite London for about a couple years, and that was like a community of impact founders. And so one of the things that we did for a while was, we brought events together, we brought speakers together to talk about what it meant to truly pursue like alternative funding that was good for them, that was impact first.
I love
And
that.
so I think that's that's a slow but surely shifting conversation, because if you want to talk about minority voices versus majority voices, unfortunately, the majority voices and the publications with the most amount of money is going to give out the narratives that, you know, will, for better or for worse, influence the biggest chunk of the startup population, and will, whatever they say will end up dominating the pub conversations that happen at 8 o'clock at night. So, I mean, if you want to talk about like voice and influence, I mean, all you have to do is go in a pub at 8 o'clock at night, see what people are talking about. That's influence right there, right?
Yeah.
Um, so I think that that's a it's gonna be a most slow moving process when it comes to, narratives and like understanding, um, broader, fun, broader sources of capital. Um, I think it's also going to take some time on the limited partners end too, right? I mean, I think a lot of us are self-bootstrapping, sort of like a lot of our own projects as well. Money is influence. I mean, for better or for worse. I mean, we can't pretend that we don't live
Material.
in a materialistic world. Yeah, and I think it'll probably take, I think, for some of us to become a lot bigger, just to be able to like achieve a little bit more of like the kind of influence that we want to, I think, in the tech ecosystem and space. If you want to like use that term, right? I think right now, the firms with the most amount of influence are the big Silicon Valley players, if you know Y Combinator and Andreessen Horowitz and Sequoia. And it's just kind of like, it's a bit of a state where like whatever they say on the internet, everyone kind of takes it as gospel, even though you can't actually do that because, they only geared towards one type of business. But everyone thinks that they gotta build this one exact type of business, even though it's not true.
Yeah, it's so interesting. Like it's like you're really shaking it up. Like this is like almost like this, and you're being very conscious with regards to how you're doing it, and that it will take time. And you've got these big behemoths, right? Of business organizations, if you like, from a VC perspective. But, it's interesting because we're at this really critical point in time. The world is changing rapidly. Like everything's almost becoming up for grabs, if you like. We're in a revolution, AI, everything else. And here you are, almost challenging the status quo and looking at things differently. Because when we booked in and I met you pre, and I asked you a question around what's one unique insight or lived experience in life, leadership, or investing? And you said working on alternative venture instruments to shape the early stage tech ecosystem, which again is very, future. It's like you're almost wanting to proof out the future of the VC. Can you talk a little bit about that, please?
Yeah, it's well, the instrument is the blending of an income share agreement and a redeemable equity safe. So yeah, happy to slow down if I'm saying a lot of stuff that that isn't as understandable to yourself or the listener, but an income share agreement is basically you take basically what was invented for flexible student financing, and you basically apply it to really talented entrepreneurial individuals. And you can also use it to expand to the scope of, content creators, aspiring musicians, aspiring athletes, which is actually what the US branch of the fund is doing at the moment. So you can take that and you can pair it with the redeemable equity safe, which is like actually the more a founder pays back of the income share agreement flexible debt, and the more future equity they're buying back as well. So basically, it's sort of like you think about that sort of there's two ways the founders can give return. They can do it through the traditional way, or they can do it through the usage of income share agreement, buying back equity. The fund gets cash right away, and the founder sort of is able to repay back what they get money wise, in sort of like a more tangible, sustainable way, rather than a sort of like, you know, every $100,000 has to turn into 10 billion or 10 billion or something like that, right? And I think sometimes like some people get the knee-jerk reaction of like, oh, they really hate debt and stuff like that. Except I think if you played math problems, every founder is to realize that money has to be paid back somehow. Like not you can't treat VC money as a grant, and unfortunately there's too much in the ecosystem where a lot of naive founders treat VC money like a grant. It's not a grant, it's just delayed. It's kind of like a just delayed payback that, you know, it manifests in different ways. And obviously they do the 90% sort of like 90% fail, so that means that, to them the failed bets don't matter as much. But when it succeeds, then that starts to matter a lot more.
It's so interesting, and I really do admire you because, like, you are really looking at a sustainable model where it works for the founder, but also keeps them in check in terms of like ensuring that they have that opportunity to buy back if they want to, for example. But you're doing it in such a conscious, sustainable way. Like, did this because you said you were a founder previously? Were you a founder at that back then looking for, for VC backing, investing, and that's where you were like, where did this come from? Because it's really interesting because you don't hear this often, but you're literally looking to turn it upside down, right? And shake it on its head. Or is this something that you've grown up from a morals, values perspective where you've been educated on this is what the value of money is, etc., etc.? Like where has this come from? Where has your wanting to do good in business, if you like, and knowing the value of money and what money can do. Where has it come from for you
And a lot of the insights actually came a lot more from when I was ecosystem building and being a head of community.
in the community?
As a
Yes.
yeah, as a founder, it was mostly bootstrap to be honest. I was a little bit more focused on trying to get myself to acquisition in a more straightforward way. So that was actually more of my goal rather than sort of like get funding.
Yeah.
Um, but yeah, on the ecosystem building piece, I mean. Yeah, I wanted to create something that was kind of like, win-win for everybody. Um
So you've
and
almost
I think
pressure tested your idea. Like you've pressured your idea through a community to then go, look, there's got to be a different way to do this, right? And like, yeah.
yeah, pretty much though if I'm being honest, it wasn't totally original. I just forked some ideas from the US and then tried to bring them over to Europe. I think that's just kind of like what I've been doing. Um so pressure tested, yeah, in a lot of ways, but also mostly just drawing from a lot of US inspirations from people that have tried to experiment with alternative financing as well. Um, and then yeah, also having spent a lot of time in the impact founder organizations has also spent a lot got me thinking about a lot of these things in terms of, yeah, regenerative capital as well as like, like not all or nothing economics.
talk to me about the not all or nothing economics. Sorry if I'm asking you a lot of questions, but I'm finding it fascinating. Like you're bringing up all these
Yeah,
words
go
I
for it.
absolutely love: regenerative, sustainable, upside down, reshaping. It's all well, it's all future proofing, right? And the old world of hustle and the old world of, you know, succeeding at no cost, etc. It's kind of giving way to what we're talking about today, like what we're talking about now, right?
Yeah, well, not all or nothing economics. I'm hopefully remembering the right term that I just used earlier. But it's basically you just create, I think, the structures that enable a founder to truly build a business that's authentic to them, as well as like, a lot of do good founders want to build businesses that that are as well profitable. They
Mm.
they do good in the world, right? So hopefully the impact of a lot of their innovations make things more convenient for people, save lives and a lot of different things, right? And unfortunately, I think, you get yourself through the VC echo chamber, and on one hand, yeah, maybe you're able to reach a lot more people. I think that's one benefit of it. On another hand, everything starts to become extremely money focused, and then the only sole purpose of you building your business just ends up becoming like, how do I churn out the most amount of money possible? Then the sort of adaptation of this mindset causes you to lose sight of a lot of the other things that are important in business, and then you only start to care about how do I churn out as much money as possible. And then just the loss of priority and the loss of perspective, I think can impact how how things are built and how things are done.
I agree. And you know, energy plays a big role in this, doesn't it? Like in terms of like it's like money flows, energy flows. So it's kind of like when you lose track of and you're so focused on one thing and you're almost got your blinkers on, you lose sight of everything else around you and what you set out to do with your business in the first place. So it's really interesting that you're bringing that up because I think quite often we do that when you know, and the more we yeah, the more we are growing and if the business is performing, the more we want more. We just want more and more and more, and we keep chasing and chasing and chasing. And it's like, hang on a second, we almost need to just take a step back and go back to, well, what was the purpose of the business? What, you know, what are we here to do long term? Which for me is that whole reactivity piece, right? Do you see a lot of still, I guess, hustle and burnout culture type in the VC world and the founders that that you encounter?
I think more so than ever before, funny enough. Just because I think in the age of artificial intelligence, I think there's sort of like a weird contrast between, I think, a lot of the tools that are available to us are allowing us to work a lot faster than ever. But then at the same time, a lot of founders are putting more hours in than ever, because I think a lot of traditionally what separated founders, such as like, use of technological models, a lot of those moats are gone now because a lot of founders are building off of very similar technological models. I mean, Claude Code, OpenAI, kind of like, uh, um, whatever models they've been churning out, and whatever they're trying to like build on top of, a lot of like existing models and just trying to fine tune them for, exact purposes, right? And it's like, I think, just being in the Bay last week, I think it feels like watching a lot of founders try to build like they have a gun to their head. And I think I mean, yeah, you respect, people working hard, and I think it's very, very important to work hard in the business space because um, speed is an important element. But I think if I want to use like marathon running as a comparison, you don't want to sprint the first mile at a 5:10 or the first kilometer of a 42-kilometer race at like a 2:30, right? There's a reason why it's called a marathon, and there's a reason why building a startup is colloquially known as a marathon, right? It's unfortunately, in the age of AI, it's way too easy to lose perspective and to think that every single living day you have to work like you have a gun to your head. And it'll be crazy to see like just how long everyone's going to be able to sustain that for.
Yeah, it's so again, you're so insightful because I've noticed it myself recently in terms of like And I was speaking to somebody else on the pod about this last week, and I was like, I feel like AI is exhausting me a little bit at the moment because there's so much you can do from a productivity, efficiency perspective. But then there's also it's almost like outsmarting you half the time or trying to because you put something in, you want a really simple answer, or you want something really simple, and then it adds on and it brings you more, and then your brain starts thinking more, and then next thing you know, I'm just like, man, I need a break from this. Like, I actually just need a break. And it is does sometimes feel like you're having a gun held to your head in terms of like you've kind of handed over stuff to AI to help you and support you, but then it's almost like, there's this race. It's a race against yourself. It's a race against like you're looking, you look out on from a social media perspective and you see there's so much like businesses and people and leaders need to be more authentic than ever because there is just this common, I see kind of feel like that AI is almost kind of some way, if we're not careful, replicating what we're all doing. And so that's even more pressure to kind of how do you make sure you remain different? How do you make sure you remain your authentic self? You stick to the purpose, you stick to what your intention was. And then the other point of it is that, like again, I'd love your thoughts on this, is that we're going to see a bit of a plateau out of we're kind of everyone's like there's this we're just AI happy at the moment, but it's like at some point not every business that is built on AI is going to succeed, like, right, like it's yeah, like I mean I'm not suggesting like AI is part of the business, but it'll be really interesting to see in the next kind of I don't know 2 years. What's your thoughts on all of that?
It's a very difficult to predict space.
Yep.
Um, I really couldn't tell you who's going to be winner takes all in the AI space because there's been way too much stuff that's happened over the last, even few months where unexpected developments and unexpected breakthroughs have, sort of like changed the game for a lot of people. Um, I think. I think it's not just, I think in AI there's going to be breakthroughs. I think like, especially in the Bay Area, like robotics have
Yep.
been a lot of a big theme as well. So I think, so now you've got an increasing amount of like highly technical founders trying to make their wave in robotics and wearables as well. So I think that's going to be very, very interesting. Um, where's the AI bubble end? Yeah, there most likely will be a bubble. I mean, there's millions and gazillions of people just trying to build something and make their mark in the space and hopefully try to squeeze away into, the very limited amount of, sort of like top dog spots in the top of the subscription charts, if there's a subscription chart, and acquisition charts. I think like a lot of these bigger organizations are in a race to make a lot of acquisitions to bring on some high talent to try to be first in the AI race. Um, yeah,
Back to the marathon.
it feels like I'm watching a little bit of TV.
Yeah, it does. One to two last questions for you. If What would be my question? I had a chain of thought and it's just gone away on me right
Go
now.
for it, go for it. It's all right. Take your time.
No, no, no. In terms of what does the next shape of VC look like for you? Like, forget about like in terms of what you're still proofing out and what you're doing, but if you could if you could hold a crystal ball up right now and make some sort of not even prediction, but what you'd hope it to be, what would it look like?
I think what I would hope it to be is sort of like what I'd want to see for founders is sort of like a marketplace choice of options in terms of like, all right, like you want to grow a business, like here are the different options available to you. Here's capital that you can use to grow really, really quickly. Here's capital you can use to like that's more hybrid that you can use it to grow at a more moderate pace. Here's interesting sort of like flexible loans you can take to, try to open up a shop. And that makes sense, right? Revenue-based financing options. Just for like different types of founders to open different types of things, right? I mean, not everyone's building an AI business. Some people want to
No.
build consumer goods brands. Some
Yeah.
people want have an interesting snack or tea they want to try out. Some people want to get a chance to experiment around with the restaurant concept, right? And I think you want to like, produce a lot of just interesting sort of ways of financing as well as like incubators to make it easier for people to for really talented, if you want to call it like non-extreme techie entrepreneurs to, get a chance to get their concept and share it out in the world. And I think that's incredibly important. There's millions of types of businesses and a lot of it doesn't get talked about in the magazines and media. Um, Now, unfortunately, I think how business is actually going to be headed, I think I mean, a lot of it I say is like sort of like what limited partners want, right? Which is basically like ultra high net worths, right? So to ultra high net worths, a lot of what we're doing is, um, well, a lot of what we're doing is sort of like, we just get funneled in one category along with like real estate, cash bonds, a lot of other things like, old collectibles, right? We're just an asset class in a series of many, many asset classes, and we're the most risky and high return of all of them. I think what we're seeing more and more is a lot of consolidation. I think over the past year, I think the fewest percentage of money has been allocated to emerging managers, and the highest percentage of money has been convert allocated to bigger funds. So you're going to see a lot of consolidation of talent amongst a lot of bigger funds. And a lot of smaller funds, I think, are just going to have to find creative ways to stand out. And it's ever changing. It's ever changing all the time because of the rapid pace of technology. So I always say thesis today is not thesis tomorrow. So if you have a vision of like what you're going to try to build for a VC today, you have to be prepared to change it dramatically over 2 years.
Yeah, fascinating. And what about you? Last question for you, and then I'll let you get to your day. What do you do to keep your creative juices, like you're reshaping, like you're shaking it up, it's upside down. Like, as entrepreneurs, we work hard, but we also need to be able to subtract, be able to get those creative juices flowing. You've got some big, bold ideas. What do you do for yourself to ensure that you're getting those fresh perspectives that you need to keep reshaping and doing what you're intending to do?
A mix of things. Yeah, I think in no particular order because I do try to dabble in a lot of decent things outside of work. No, I attend church. I do a lot of distance running. I read. I write a ton. Teach Sunday school. Hang out with spend time with friends and family, and yeah, just generally I think try to keep keep as level-headed of a perspective as I can, and I think not try to get overly caught up with noise that exists in media and stuff like that. I think try to keep as much of an even-keeled long-term perspective on things as I can. Because I think perspective drives everything that we do, and I think it's important to try to keep our perspective in a healthy place as much as we can. So
John, you're
just a
so
few things.
you're so grounded. I love it. Thank you so much. It's been such a real privilege chatting to you today. Like I've learned a lot from you, but also just love the way you're shaking it up and that just calling out, what good looks like, the impact, looking out for the whole ecosystem and how do you ensure it does regenerate over time. So, John, how do we find out more about you? How do we find out, get more insights from you? How do we, yeah.
Um, I should probably link my LinkedIn in the comments. I think that's probably the easiest way to do
I've
it.
got your
So
LinkedIn. Don't
feel
worry. I
free
just
to.
asked the question. So, yeah, I've got your
No, I
LinkedIn.
think that's the easiest. The LinkedIn's in the comments, and feel free to chat with me afterwards if y'all liked what I said.
Yeah, love it. I love it. And my business, Bee Formless, is all about, reshaping life, leadership and business, working with businesses, teams and leaders to be that new frontier because that's what the world needs. So I'm wishing you the utmost luck and I'm sure you're going to succeed. And I look forward to, dare I say it, seeing you in the good media in time and all the
I
things you're doing
appreciate
in
it.
the ecosystem. So thank you so much. Have a great day.
Thanks a ton. Appreciate it.
Thanks.